Hello guys, welcome back to another lovely trading video. In this one we're going to be doing analysis on FCEL, which is FuelCell. Was left as a comment by Delta, so we're going to go over this real quick. We're also going to have one up after this, probably an hour or two, on Alibaba, so check that out as well if you want to. So firstly, we start off on the daily to see is there any gaps that need to be filled, and the first thing that actually sticks out on this is that obviously early or late last year it was at $2 and then pushed all the way to 30, and right now we're still sitting around an $8.50. So it already shows us that this is a very volatile stock and that we can have quite extreme targets, and it wouldn't be unlikely for them to really hit that. Also, what we can see off the bat with FCEL is that volume is starting to pick up. We can see that kind of from early this year it's kind of just been dead until kind of coming into September, and now we're getting a few spikes. Looks like it's picking up a bit, and we've had now like 2-3 days of consistent high volume. So firstly, is there any gaps that need to be filled? The main one that kind of sticks out right now is 11.20. You got one at $17, and those are kind of the key ones. You obviously do have some of these where this is considered a gap, like $22, because obviously it's gapped down since then and hasn't retraced. But these ones I'm never as keen on trading off, for the main reason being they're not as clear to all investors. For the reason, and by that kind of what I mean, like this one is very clear. It doesn't come, the next candle, the next few candles are nowhere near where this gap is, so it's very clear to see. Same with this one, it gapped here, and then you don't really come within this candle the next few days. So it stands out very easily to anyone looking at it, whether you're a trader or investor, it will pop out. And so you tend to get bigger reactions, I've noticed, at these kind of levels. So those are the two gaps we're mainly going to be looking at for right now. Now we'll go over to the standard deviation charts, and we can start seeing where are these most likely going to be selling pressure using standard deviation. And we can see we've actually just come into the first deviation on the 4-hour chart. So this would indicate that we would most likely get some selling pressure. So as we can see, we kind of broke through quite strong, and so that what that usually indicates is you at least get a pullback, even if it's going to continue. So if we go over to the say intraday charts, the 5-day 5-minute, we can see it broke through, but we didn't really pull back. And what you always see, if you go back, if you watch the GM video I did a week or two back, when it breaks through a resistance such as the standard deviation, if it breaks through without really pausing or pulling back at that level, you will always come back to retest before continuing. Or I can't say always, but the majority of the time you'll pull back. That's exactly what we've now seen on FuelCell. It went up, pulled back straight to our deviation before continuing. So this does indicate that it's now pulled back to our deviation, so if it can quite easily now continue its uptrend. So that's usually the main thing we look for, is just that it kind of pulls back and then it tells us that it can continue its trend. But that does also indicate that if you were short biased on the stock, it's probably a good time to be getting out. And that's one thing as well, just want to note, is if you do see a stock like in FuelCell where it breaks through quite easily and you don't really get any hesitation at that standard deviation level, let's say you shorted in this level, you can usually do, depending on your risk management, is kind of hold until it comes back to your entry level, and then you can usually just get out the trade break even, because more likely than not, if a trade does this, it will more likely than not pull back to your level, and at the same time it will most likely continue its uptrend. So it makes sense to be getting back out at break even, and it's where you can kind of minimize unnecessary losses in a lot of cases. So just wanted to point that out. So for now then, the $8.22 level, we're not going to be saying it's a short bias level, for the reason being it's kind of broken it, it's come back, retested it, and it's acting as valid support. So instead we'll be looking at our next target, and for right now that will be the 11.20, which will be the gap fill. But I don't tend to really short heavily on these kind of levels. Yes, you expect selling pressure to be coming on here, and could be a reversal level, so there's still a good thing to be looking out for. But the next key level, and this will be a strong level for two reasons, because our deviation, our first deviation on the daily and our second deviation on the 4-hour both line up, and when you get this you do tend to get an even bigger reaction, because it's not one but two standard deviation levels at the same time. So this 13.25 level would most likely be a heavy pullback, and where could we see that pullback going? At minimum I would be looking for a pullback to this first mid deviation, so that would be around $10.5, $11. So we would be looking for quite a heavy pullback. Would be around a 20 or 15% pullback is what we would be looking for. But it's quite reasonable. Then again, obviously, if it continues up $17, we got a gap fill there, so wouldn't be unlikely to be seeing a pullback, if not a reversal at that level. But again, if it does continue higher, we do then have some strong resistance at 1850 around that level. And then I guess you can just always look at the deviations at all of these levels. You're going to get that same kind of reaction. So coming into all of these, we're most likely going to get some selling pressure. Don't really see us coming back to the all-time high, at least for the time being. But if we did, we could see it getting kind of short at that all-time level, and it could be acting as a double top. At least that's what it looks like looking now, but depending, obviously, if it takes a few weeks or months, may give us a different picture. But the reason I say that is, looking at the chart, the standard deviation is both pointing downwards on both the 4-hour and the daily, and this usually does indicate strong weakness. And as obviously we can see, it did have a strong momentum pump, but has since then just got weaker and weaker and been selling off. So until you kind of see the standard deviation also change to an uptrend, it's usually a lot better to consider this more of a double top. Like, even if it does come to an all-time high, it's more likely than not going to be the top, just because when looking at this, it just looks very weak. So those would kind of be our short levels or areas to lock in profits, depending on how you're trading. And then we can't really give any buy targets below, because the only buy target we have is at $2.45. Below that, all the deviations are negative, and obviously you can't trade a stock at a negative price. So if it comes down to 245, then that would be a level where we would be happy to get long. So that's it for the FuelCell analysis. Hope you enjoyed the video. Hope to see you in the next one, and that's it. Peace.